What is going on, my friends? Ryan Williams here, back with another one, and with just over 1 week left in 2021, I want to share with you guys my dividend investing strategy for 2022. In this video, we will be talking pretty in depth about how I plan to approach this next year from an investing standpoint, and I'll be sharing with you some of my thoughts on the current state of my dividend stock portfolio, along with my plans to actually create an entirely new portfolio. So that's what we have coming up first, and then later on in this video, we will be getting into a little Q&A where I'll be answering some of your questions, like how to spread your investments out across taxable and tax advantage accounts, and how I think you should allocate the contributions you make in your portfolios. Anyway, before we get rocking and rolling, if you guys think that 2022 is going to be a good year for dividend stocks, go ahead and give this video a big thumbs up. Also, leave me a comment below and let me know what some of your investing resolutions are for 2022. What are some goals that you have for your own investments and your portfolios that you'd like to accomplish this upcoming year? Anyway, thank you so much for doing that, and now, without further ado, let's get into it. All right, guys, so we are here on my dividend portfolio tracking spreadsheet. And real quick, I just put out this new version for you guys, which you may have seen in the last video if you checked that out. But if not, you guys can actually grab this entire thing for free. The link to do so is in the description of this video. But once you click the link, you actually won't be able to start editing and inputting your own information quite yet. To do that, once you click the link, you need to go to File, and then you need to go right here to make a copy. Okay, you click that, and then you just hit OK, and then it's going to create a copy of the spreadsheet template for you. And then from there, you're going to be able to start inputting your own data. And then when you do go start inputting your own data, the only spots that you need to put in any information are where the cells are highlighted yellow. So anything that's highlighted in white, don't worry about it, guys. It's going to auto-populate for you. Anything that you see in yellow, which should be just this ticker symbol column right here, as well as the number of shares and the average cost per share. Those are pretty much the only places you're going to have to put in data, but anything you see just like this highlighted in yellow, that's where you need to put the information in. So once again, if you guys want to grab this spreadsheet for free, please do so. That's what it's for. I know this has helped me out a lot. It just helps me keep track of my own portfolio. And yeah, the link's in the description. And if you guys have any questions, feel free to let me know. I am here to help. All right, guys, so getting into it, I want to start this video off by just reflecting on the year 2021. I know we still have, a little over a week left, but I just kind of want to go through and just talk about some of the good things and the bad things I think about my portfolio as it currently stands, as well as some of the progress that I think I've made in this portfolio in the last year. And just starting with the good, starting with the sweet stuff. Overall, I think my portfolio is in a really great spot. It's definitely grown in market value. I mean, if we go back here, we can see at the beginning of the year, I was actually probably close to about $20,000 in portfolio market value. So we've definitely grown in market value since then, not just from my own contributions, but from unrealized gain as well, which is good to see. And I also think that the diversification of my portfolio is in a really great spot. Currently, I have 22 different stocks in this portfolio, and just actually looking at this view a little bit, it's just a little bit bigger, easier to look at. I'm very happy with how everything is diversified. I don't think I'm too heavily weighted in one particular stock. And as I've kind of gotten deeper into this, I want to buy stocks and give them at least like 3-4%, somewhere in that range, with the one exception here being ORCC. This one is a little bit more speculative, I think, as far as dividend stocks go, so I'm going to leave that one put and leave it be. Lockheed Martin is currently under 3% of my portfolio, but I'm actually working on increasing that. And when it's all said and done, that will probably be about 4% of my total portfolio. But otherwise, guys, I think everything is looking really good. I'd say overall, this is looking very balanced. And then as far as the sectors go, the diversification of those, I think that's looking really good as well. You guys know, if you've been watching my content for a while, I used to a T, try and match the actual allocations of these sectors to their target allocations. But as I've kind of grown and evolved as an investor, I'm trying to do that every day actually, but as I've learned more about what I'm doing, this has become less important to me. I think it was a good approach when I was first getting into dividend investing, because it gave me some sort of criteria to adhere to. But like I said, as I've gotten deeper into this, I'm just more so concerned about buying and contributing to stocks that are at a value that are at an affordable price, because really, you need to be buying stocks at a good price at a fair value, and those are the ones that I want to put my money into. I don't want to just be buying something because it's going to make this percentage match that percentage. You guys know what I mean? So overall, guys, just with my holdings and how everything's allocated, I'm feeling like I'm in a great spot. And then going back over to this dashboard page right here, guys. So this annual dividend income right here says $1,528 as it currently stands. But realistically in 2021, I've only done about $980 something in annual dividend income. This is pretty much projected for the next 365 days. So a year from today, this is what my annual dividend income is going to be. But just in the year 2021, I think I'm at about $980 something, but I should hit just over $1,000. I think I have like 12 more dollars to go, and I still have a couple more payments coming in from the time this video is being recorded. So I'll definitely hit that $1,000 mark by the end of the year, which is a very cool milestone. I think that is some great progress that has been made. And going back to this number right here, guys, as you can see on the screen, the screenshot right here is from a video I put out in January. The estimated annual dividend income at that time was only $820, and now we're sitting at over $1,500, which is almost double. And I made some big contributions, and I'm obviously reinvesting dividends, so I guess that's to be expected. But I think that just speaks to the point that I try and make in a lot of my videos, that this compounds a lot quicker than you think. If you just get started and you keep going with it and you stay consistent, guys, you're gonna go a lot farther than you think. And at this point, guys, we're over 76% of the way to my 1-year goal, which is to hit $2,000 in annual dividend income by the end of September of this upcoming year, 2022. We'll see if we can hit it. I mean, if we're making progress at the same rate that we have been this year, we're gonna bust through this, no problem at all. No problem at all, not worried about it. And I'm trying to contribute as much money as I realistically can to this portfolio or to investing. So if I just can continue to do that, or maybe even do that at an increased rate, we're gonna hit this no problem. And I'll tell you what, guys, those are the two, I'd say, good things about what's been going on in this portfolio in the last year. A third thing, if I had to throw that in, I've learned a lot. I've definitely grown a lot as an investor and have a better idea of what I'm doing now compared to where I was at the start of this year. And I think if you actually go back and watch my videos around that time, not only am I a little bit better on camera, it's actually kind of cringy to watch some of those old videos, but the information's better. And I try and place a huge emphasis and spend a lot of time on developing my skills and doing this, not only because I like doing it, and if I'm going to be doing it, it's important to know this stuff, but I also do it because I want to make sure the information I'm putting out to you guys is good, it's helpful, and it all makes sense, because I don't want to look like an idiot, which I think if you go back and watch some of my old videos, and probably some of my ones from today, I probably do sometimes, which is okay. But I can say just in the last year, it's been a really good year of growth, and I've gained a lot of knowledge. And also, with that said, I have you guys to thank somewhat for that. I've said this before, but being able to talk and interact with you guys about dividend stocks, not only in the comment section of these videos, but also now on the Discord group, it's been very helpful. So keep it up. You guys are rock stars, and I appreciate all of your support there. I really do. All right, guys, and that was the good. Now let's touch a little bit on the bad. Now, I guess there's nothing really too terribly bad or too terribly wrong in my portfolio. However, one thing that does come to mind that really sticks out to me is I need to add some more stocks that have a higher percentage of dividend growth. And what I mean by that, if we go over here to Seeking Alpha, I want to go to the dividends page right here. These are all the holdings in my dividend stock portfolio. If we go over here and just organize it by the 5-year CAGRs, we can see that there's a couple really good ones here that have high 5-year CAGRs. XYLD doesn't count because it's not been growing its dividend for the 5 years, but AbbVie has a 5-year CAGR of almost 18%, Starbucks almost 17%, and then Lockheed Martin, AWR, and then Altria Group are all looking pretty good between 8 and about 9.5%. And that's kind of the baseline that I personally use to consider a high dividend growth percentage. About 8% or above is something that I consider to be really high or really good. But with that said, guys, you can see the great majority of the stocks in this portfolio don't have super high dividend growth. Pretty much from Altria Group and below, everything is less than 6%. And if we scroll down, looking at some stocks like WP Carey or AT&T or Verizon or EPD, which are, or even Campbell Soup, which are some of the bigger positions in my portfolio. Realty Income, that's another one. They have pretty minimal dividend growth each year, but some of them do have pretty long dividend growth histories, like Procter & Gamble. While the growth isn't that high, it is steady and it's reliable, 65 years. Same thing with Realty Income. It only has a 5-year CAGR of 3.5%, but they've been growing their dividend for 24 years straight, so that's a good sign. Same thing with Southern Company, 3.35% dividend growth, but 20 years of consecutive growth, so that's good to see. But that is one thing I do think I could improve on in my portfolio, is having a couple more stocks in here that have 5-year CAGRs that are more akin to what we see here with AbbVie or Starbucks or Lockheed Martin or AWR or Altria Group, just somewhere 8% or above. I think that would be really good for me, and that's definitely one thing I'm missing. And that's something that I plan to work on in 2022, guys. One of my goals is to add a couple more stocks like this, or to kind of shy away from high yielders, because I have enough of those, I feel like, and just focus more on dividend growth. And one of the stocks that comes to mind when I think about that is actually one that we talked about in the last video, and that's Allstate. Allstate is a stock that has been sitting on my watch list and currently has a 5-year CAGR of, I think, 20%. And actually, if we go over to my watch list real quick, let's take a look at that. So let's organize it there. Sorry, guys. Okay. So Allstate, yeah, almost 20%. Citigroup says it has 37%, but they have 0 years of dividend growth. So I am going to take this with a grain of salt, to be honest with you guys. But also another stock that I just added to my watch list, AMT, which I didn't want to talk about this yet, but we're here. So they have a 5-year CAGR of almost 20% as well. So I have a few good options on my watch list, guys, but from here, it's just buying what's at a discount or what's at a value. I definitely think Allstate is. Wouldn't mind adding that to my portfolio. I'd also would love to add Microsoft to my portfolio, but that's not at any foreseeable discount right now, obviously. HPQ I was kind of considering for a while, but I don't know. I'd rather add Microsoft if I'm going to add anything in the tech sector, so I might hold out for that. Costco is one that I definitely plan to pick up if there's any sort of correction or crash. I definitely want to add this one in Microsoft to my portfolio. So I might hold out for those two. Let's see what 2022 brings, and if those bring any sort of correction, I'll swoop these guys up right here. Maybe we'll add Allstate here in the near future as well, and that's 3 good stocks that have high dividend growth right there. So that put me in pretty good shape. And then one of the other more negative things about this portfolio, I'd say, guys, is a fair amount of my dividend income is currently coming from non-qualified dividends. And for those of you who don't know the difference between qualified and non-qualified or ordinary dividends, essentially the difference lies in how they're taxed. Qualified dividends are taxed at a lower rate compared to dividends that are non-qualified or ordinary dividends, which are taxed as regular income. And those can vary just based on whatever tax bracket you fall into. And if we go over to my spreadsheet here, I want to go over to the portfolio summary page and just show you exactly how much of my portfolio is non-qualified dividend income. So just going through the list right here, guys, the first one, EPD right here. Okay, we also have JEPI right here. And then Main Street Capital Corporation right there, and then Realty Income, ORCC right below it, and then WP Carey and XYLD as well. So if we add all of these up right here, I don't know if you guys can see this in the bottom right-hand corner, but the total of all the income from these stocks is $619.10, which currently is about 40% of my total annual dividend income. So a substantial portion of the dividend income this portfolio is generating is coming from ordinary dividends or non-qualified dividends. And it's not the biggest deal today because, I don't have too high of a dividend income. It's only, $1,500. But someday this is going to generate a lot more money. And so this is something I need to be mindful of as I move into the future. And with that said, guys, I actually think that's a pretty good segue into the next thing that I wanted to talk about, which are my goals for 2022. We already talked about my income goals. I'd love to hit $2,000 by September 2022. But one of the things I will be doing in an attempt to be more mindful of all the tax stuff, guys, is I will be making a Roth IRA. I will be actually doing that sometime soon after the turn of the year. So sometime in January, I will be making a whole new portfolio, a Roth IRA, which is a tax advantage account. And in that portfolio, guys, I'm going to be doing it a little bit differently than I do this taxable portfolio here. Instead of having individual holdings, in my Roth IRA, I'm planning to just fill it with a handful of Vanguard ETFs. Keep it simple, keep it, hands-free, keep it out of sight, out of mind. I definitely don't want to be picking stocks for 2 different portfolios. I have trouble doing research for one portfolio and picking stocks for one portfolio. So if I'm going to be doing that, I want to just do it in this portfolio right here. And so that kind of begs the question, like, which ETFs am I going to be adding to that portfolio? And I'm glad you asked, because I'll show you guys right here. So this is kind of what I'm thinking so far for the Roth. It's nothing special, guys. It's just 5 different Vanguard ETFs that I think are going to be pretty diverse and should give me exposure to the entire stock market as well as some bonds. So the first one here is VTI. Total Stock Market ETF encompasses the entire stock market. There's like 4,000 plus different stocks just within this one ETF. And then we also have VWO, which is an emerging markets ETF. VXF, which is an extended market ETF, which I'll show you some of the holdings in this one because it's kind of interesting. So scrolling down, the top 10 holdings of this particular ETF are Square, Blackstone, Snowflake, Uber, Zoom, Airbnb, Marvell Technology. I actually don't know this company. CrowdStrike, Lululemon, Snap, Snapchat. Definitely a bunch of stocks that I would stay away from for this portfolio here. So it's going to give me an exposure to, just different kinds of stocks, and I'm not going to have to worry about choosing them for myself. I don't want to do that. I just want to focus on picking good dividend stocks for this portfolio. That's my bread and butter. And with that said, I do think it's important to have a retirement account or have a tax advantage account, which is why I'm making this. Just kind of going back to my point earlier about the qualified versus non-qualified dividends. Now with this portfolio, this Roth IRA, I won't have to worry about it. Anyway, moving on to the other ETF I'll have in here is a small cap value ETF, so I get some exposure to small caps. And then the last one is just the total bond market ETF, because it's, can't hurt to have some bonds just for some extra security there, or some extra diversification if nothing else. So that's kind of my plan for this Roth IRA. And like I said, I'll probably be making it sometime next month. I'd like to do it as soon as possible. And I am on the fence about where I'm going to be doing it. It's either going to be also in Charles Schwab, like my normal brokerage account, or I'm going to be making it on M1 Finance. And I'm actually kind of leaning towards M1 Finance for now, just so I can make it as hands-off, as out of sight, out of mind as possible. And I've also really been wanting to try M1 Finance because it looks like such a cool platform. And I think it would actually add some good diversification and would kind of spice things up for these videos and would give us just an extra thing to look at. So it could be cool in that sense as well. And as far as contributions, guys, that's another one of my goals for this next year. So currently I'm investing $150 every single week into my normal account, my Charles Schwab just taxable account that you guys see in every video. I would eventually like to bump that up to $200 a week. As my income grows, I'd like to be able to contribute a little bit more to this. And so that's one of my goals for 2022 is to get to that point of $200 a week. And then additionally, guys, I would like to start off this Roth IRA. I'd like to start by contributing $50 a week. So if I can do $150 into my normal account and then $50 into my Roth IRA, I think that's a really good place to start. By doing so, I'm not going to be maxing out my Roth IRA quite yet, but I would like to get to the point where I am maxing that out, and I'd eventually like to get up to $100 a week in the Roth IRA, but I think $50 is a good place to start, and I can grow that over time. I'm only 28 years old, so I have a lot of time to grow this retirement account. I'm not going to be able to touch the funds in it for like another 30 years basically. So yeah, like I said, I'd say I have a lot of time to bump up those contributions. And then the last thing, guys, just my last goal for 2022 is to continue learning and continue evolving as an investor and a content creator, and hopefully just be able to put out some better videos for you guys and hopefully put out better information. I'd really like to become more familiar with financial statements specifically. That's one area I think that I could use some work on, and I'm working on it right now. I'm not waiting for the new year to start, don't worry guys. But that's one way that I think I can improve. I also would like to increase my knowledge on analyzing specific types of businesses like banks and insurance companies. I've talked about Allstate, I've talked about Citigroup in some of these videos. I would like to expand my knowledge on analyzing those types of businesses, as well as some other types of businesses that are a little bit different compared to your average Coca-Cola or Procter & Gamble, like business development companies, BDCs, which would be businesses like Main Street Capital Corporation or ORCC, two of which I have in my portfolio, as well as real estate investment trusts. I'd like to learn a little bit more about the intricacies of analyzing REITs. That'll be Realty Income, WP Carey in my portfolio. So that's something I'm going to continue working on in this next year, and most definitely the years that follow that, because really guys, this is a never-ending process. There's always something new to learn when it comes to investing in the markets and what's going on. It's crazy, but it's fun, and it's been a really rewarding journey so far. And I can say just in the last year or so, really just in the last, I guess, 14 months that I've been making these videos, I've learned a lot. And I've said this before, but at making these videos, it forces me to learn a lot. Like if I'm going to be talking about this stuff, I should know what I'm talking about, and that's what I'm working towards. So with that said, thank you guys for all your support on these videos over the last 14 months or so. It's been awesome. It's just been such a cool journey so far, and I can't wait to see where 2022 takes us, All right, guys, that's what I have on deck for 2022. Hopefully all of that made sense. A lot of it was just me kind of thinking out loud and rambling on the direction that I want to go this next year. So, like I said, hopefully it all made sense. And now with that behind us, we are going to move on to the next segment of this video, which is the Q&A. I'm going to be answering a couple of your guys' questions. The first of which comes from C. Brenneman here on YouTube, who wants to know, do you spread your dividend investments over taxed and pre-taxed accounts? A lot of opinions on this topic. That is a great question, and that's also one that I pretty much just answered, right? So at the moment, as you guys know, I just have that one brokerage account. I just have my Charles Schwab account, but I will be making that Roth IRA like I was talking about here next month. I've really come around to the idea that it is important to have retirement accounts or tax advantage accounts just because taxes suck, man. No one wants to pay taxes. So the more you can avoid it, I would say the better. But with that said, I do think it's also important to have a taxable account, especially if your goal is to retire early. It's imperative to have a taxable account, actually, if that is your goal, to retire early, which is one of my goals, to be completely frank with you guys. And when I say retire, I don't mean like just sit around and do nothing all day. I really just mean get out of the 9 to 5, get out of the rat race, and just do things I enjoy, spending time doing things I enjoy. And that is one of my biggest motivators for being a dividend investor, is just being able to buy back your time and create passive income, so you don't have to rely on going to work, and you can spend more time doing the things you enjoy and with the people you love. So Mr. Brenneman, hopefully that answers your question, and thank you so much for asking. I really appreciate it. Now moving on to the second question of the day, which comes from Shanti, who wants to know, can you please share your view on this? Identify 20 to 30 solid stocks and keep investing over a period of time is a good way for the long run, or investing in different stocks in each month would be the best. I know that was a little bit jumbled there, but essentially what Shanti is asking is, should you just invest in 25 to 30 stocks and nothing else, just keep contributing to those over a long period of time? Or is it better to maybe start off small and then add some stocks to your portfolio as you go and be buying different ones every single month? And I think the answer is probably somewhere between the two. I mean, I wouldn't make it a goal to add a new stock to your portfolio every single month, or just focus on buying one stock every month and then move on to a different stock the next month. With that said too, though, I wouldn't just choose 25 to 30 stocks or any sort of number of stocks right off the bat and then never try and add any more to your portfolio. This is probably how I would approach it. If you're new to dividend investing, I would probably choose like a few different ETFs so you can have some diversity, have some security, and then over time start slowly adding some individual picks. Maybe you're a coffee drinker, so you want to invest in Starbucks. Maybe you go to McDonald's every day, so you invest in McDonald's. Maybe you shop at Costco, so you start buying Costco, which I wouldn't do right now because it's very expensive, but you get the gist of it. If you're new to investing, I would just start off with some ETFs, start slowly choosing some individual stocks that look like good investments at a good price, and then start building that over time. And then you start with one stock, and then you find another that fits your criteria, and then so on and so forth. And you do that till you have as many stocks in your portfolio that you feel comfortable with or that you like. So that's how I would approach it. I don't think that there's any sort of set number that you need to have. I actually think that everyone does it a little bit differently. I know there's some people who think less diversification is better. On the other hand, I know people who think that more diversification is better. And really at that point, it's just whatever your preference is. And you'll come to know what that is and where your sweet spot is. As you get your feet wet and start investing, you'll start getting a pretty good feel for it. So that's my take on it, and hopefully that answers your question. Thank you so much for asking, and hopefully that clarifies things. If not, leave me a comment below and let me know if you need a little more explanation on that. And with that said, guys, that pretty much wraps it up for today's video. We covered a lot of good ground today, and it was really helpful for me to get out and share some of the things that I have for 2022. I mean, I think about this stuff a lot, but actually getting it down on paper, I've got my notes here, and sharing it with you guys just helps solidify it here in my brain. So thank you for letting me bend your ear for a few minutes while I just kind of think out loud about some of this stuff. I hope you guys enjoyed watching. And with that said, I'd be very curious to hear what your goals are for 2022. What investing moves do you guys plan on making? What do you think could be better in your portfolio? What are you trying to accomplish this next year? Let me know in the comments below. Hey, real quick, guys, before you click on to the next video, if you have not done so already, don't forget to leave a like, leave a thumbs up on this video. And also, if you're not sick of me quite yet and actually enjoyed this video and would like to see more from me, go ahead and hit that subscribe button as well. At this point, I'm putting out 2 videos on the topic of dividend stocks every single week, and I would love to have you be a part of my dividend investing journey. And with that said, I will now get out of your guys' hair, but thank you once again so much for watching this video. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.